I don't know who this is for, but don't buy nothing else. Don't buy not one more thing. Don't buy nothing from the TikTok shop. Don't buy nothing from nobody's Amazon storefront. You don't need another faux olive tree for your bedroom. You don't need another pair of shoes that's a different color. You don't need no dimmable Amazon lights. You don't need no storage container. Don't buy nothing else. Don't nobody need nothing for Christmas. Kids don't need nothing. Grown folks don't need nothing.
You know that one's going to be hard. People just want to go all out for their family, their friends for Christmas. Telling people not to get stuff on Christmas is like saying, don't breathe air for some people.
Everybody need a roof over their head.
Yeah.
Bills paid, warm food on the table, and love. Don't spend your money on nothing else. Go spend that money on stocks.
Ooh.
Go invest in some stocks. Let me tell you something.
Tell us.
My portfolio is up 241% as of today. And I got Bitcoin too. I got coins.
Okay, all right, I want to talk about that a little bit. This is not financial advice. I'm not a financial advisor. I think a lot of times what happens or what I see happen to people in real life is they're like, I don't know how to invest in stocks, so I'm just never going to do it. And then every year, a new year goes by, new stocks take off, new opportunities that they could have been in. They just totally missed out. What ended up happening instead is they went to the store or they did these Amazon hauls. They was at Sephora racking it up. They was doing all these different things. They was going out to eat, swiping the credit cards or, Klarna, Afterpay, whatever it is that they were doing, going on trips. And I'm not saying that any of these things are inherently bad. I'm just saying this is where the money went. One of the things I truly believe that we are taught in society from a very young age is to go to work and whatever it is you want, you save up and you go spend that money, right? Now, hear me out. Most people go to work and you go to work and you say, oh, I need to live my life. I should be able to do what I want. I should be happy. I work. I should be able to do what I want. There's nothing wrong with that. But I don't think we are taught if you go to work, take that same money you went and worked for and then make the money work for you. And all that really means is when you go to work, if you make $100, take 20 of that dollars and invest it somewhere. So then that money is working. This is just the idea, right? Whatever the number is that you want to work for you, that's your number. And what I think that ends up doing is taking away money that could be making you more money without you having to do that work. You have to go work for this money over here. But over here, this money could be making you money without you having to physically take your time and your energy to go work for it. But on this side, you really just made another business or another company money, not yourself, right? Not only that, we have normalized the idea of debt, of just if you don't have the money, go put it on Klarna or Afterpay, right? So you still have to go work for the money and now you're in debt. A lot of people that know about stocks and investing will tell you, the younger you are and that you figure this out and you actually start implementing it, the better you will be. You will be way ahead of everybody else because a lot of people don't start doing stuff like this until they're 30 because they just weren't worried about it in their 20s. They were living for right now. They were spending all their money, whatever the case may be. If you're doing this in your 20s, you are far ahead of your peers. Most of your peers are not going to have the discipline to do this because it's going to be hard. I didn't say this is going to be easy by any means. At a younger age, you simply have more time and you can do it with a lot less money than if you're trying to play catch up at 30 or 40. You see what I'm saying? And then you're already in the market. The time in the market matters, y'all, because at this point, you could have been in some stocks that you didn't think were really going to do numbers like they're going to do, but they're going to do those numbers and you're going to see returns and compound interest and things like that. And the sooner you can get the ball rolling, the better.
Stop spending your money on crap. Invest your money in something that's going to retire you. Buy some stocks. I don't care if it's $5, $2, $1. Every time you get some extra change, instead of buying something online, buy a share. You can get shares in certain companies for $3. You buy stuff and people take all their wealth and they go buy stocks and real estate with your money.
Yeah.
Use your money.
Y'all, money is a tool. Money can be used to buy something at the store, or you can use money to buy something else that I think is a lot more valuable, which is what a lot of people like myself try to use money to do. You use the money to buy time. You use money to buy convenience. You use the money in order to buy the things that would free up your time. If you have money that is making you more money, this would allow you to have freedom to not be constantly at work clocking in, not just to go buy stuff. And I think a lot of people, if you thought about money more like that, it'd be a little bit easier for you to invest into yourself or into your future. Instead of you spending $20 on something at Sephora and you want to, or okay, $100 at Sephora, because some of y'all just outrageous. Let's just say you took that $100 and you put it into a stock and then you ended up getting a 300% return, right? What does that leave you with? That leaves you with $400. You are the Sephora stock. You are the stock. You are the company. You're investing into you. So instead of you saying, I want to invest into my looks, which is like, okay, once you wipe off your makeup or whatever it is, you run out of your product, you're going to be right back at Sephora trying to do another haul. If you invest into yourself long enough, it's going to compound. Now, what a lot of people do once they end up getting whatever their goal is, they'll start to scrape a little off the top, right? And they'll say, well, I want to spend $100 on myself. Well, guess what? They took $100 out of $400. You took your only $100, which was the tool. This is why I say it's a tool. It could be a tool, a money-making machine. Money can literally be a money-making machine if you put it in the right spot, or you can just go spend it. And if you're spending it, who are you making money? The same money that you won't put into the stock market, when they get the money from that stock that you're helping the price go up in, they're going to take the money and invest it into businesses. They're going to invest in the stocks. So you have to start asking yourself, what are people with money doing with their money? And ask yourself, what do I do with my money? And do they align? Or if you don't want to live that way and you don't care, it's fine. Do you want to be a consumer or do you want to be a producer? Because if you think about what I just said, if you use money like a tool, you would essentially be a person who is able to take money and produce more money. Or you can be a consumer, which means you're just a person out in society spending money. Because this means you might not have any money. This might mean you don't have money today. You might not have money in 10 years, 20 years, 30 years, because the producers of money, you have to start somewhere. It's not just going to somebody's going to come out the sky and make the money machine start printing you money. That's not going to work that way. You have to start somewhere. And that is why whenever you are trying to get better with your financial journey, you're going to have some discipline, a budget. It's important to stick to the plan, even if it start getting a little rocky, because on this side over here where you just spending money, you're not getting nothing out of it. I learned this lesson a long time ago, and I'm almost 32. You ever hear people say, oh, I can flip that. I can flip that. Look, a lot of y'all grew up how I grew up. You know somebody that was always hollering, I could turn 200 to 300 and folk. That's how I see money. I'm like, I want to flip it. I don't want to just go spend it. If you just spent it, we don't got nothing to flip. You can't flip something you don't have. You got to have something to flip something. And I don't condone this behavior, but I promise you my mind just went to quarter brick, half a brick, whole brick. Hey, it was because I was thinking about flipping it math. Okay, whatever. Okay, all right. One reason I think a lot of people don't like to leave their money in their checking account is because the bank is for sure going to take your money and be investing it into stocks, into the markets and stuff. And when you're younger, you probably don't know that. You're like, oh, I'm just going to put my money in this bank. The bank is taking your money. Say they were in Nvidia, right? Nvidia stock. Say it went up 100% within the last 3 years. Actually, it's way more than that. And you've had money sitting in the bank. The bank took your money and has been investing into stocks like that. That's just an example. I'm not hypothetically, right? Banks will use your money and loan it out to other customers and get it back with interest. And guess what? You ain't going to get none of that interest that they're collecting. Compared to the amount that they're able to get and they give you a couple of cents, it's kind of like an insult. Wouldn't it have been better that you did that instead of you getting a few cents? And a lot of people are like, oh, I don't believe in the stock market. It's a scam. It's this and that. Is it a scam when the banks are still taking your own money and putting it into investments and making massive returns on your money? I guess it's not a scam when they do it and they actually do it and make money.
Come on. Stop playing. Buy you some stocks. Don't buy nothing else. You don't need nothing else. You don't need it.
Hey, quick question, but what the are stocks? How does the stock market work?
Just think about stocks like this. These are little bitty shares of a company that you can own. Let's say this is company A, right? This is the company you want to own. It's a big company, but you want to own a little sliver. This is what a stock is. You get a little bit of this stock. Say the stock is $100. You get this is $100, right? But this is the whole company. You got a little bit. That means you are an owner, because if you got to put this together for this whole thing to come together, it needs you, right? You're an owner of this stock. I don't care how much it is, right? That's how stocks work. And that's why when people own a really good stock, like a big stock, and they own even a little bit of it, this stock right here could be worth $1 million, but I just showed you a little something. This right here is worth $200,000. And what people want to do is buy as many shares of a stock as they can as possible at the cheapest price as possible. And as the stock price ends up going up, so does the individual's portfolio. And this is why a lot of people say I'm up 300% on my portfolio, because if they sell today, they will be selling at a 300% gain. Just like you can gain in the stock market, you can lose. Yeah, that's what's going on in some people's portfolios. So that's how it works.
Because I've asked people, and I'll look it up. Because I want to understand what the Dow Jones Industrial Average means.
That's just like the 30 largest companies, like the really good financially stable companies in the United States.
What the S&P 500 is.
S&P 500 is 500 of the top companies in America. That's S&P 500. And a lot of people like to invest in the S&P 500 because these are your top performing 500 companies in the United States. These are going to be, this could be Coca-Cola, Nvidia, Amazon, Tesla, like 500 of them. I can't name all 500, but if you want to go look it up. But top 500 of those. The S&P 500 is diverse, which is why a lot of people like to invest in that. And the returns annually are very safe for the most part because, as I said, these are the top 500 companies in the United States.
Well, you invest your stocks over here, and then the stocks go up, and then you pull out the money, and
What was confusing? So you invest your stocks with a brokerage account. This could be anything from Webull. This is not financial advice again. This could be anything from Webull, Robinhood. I use Fidelity. People use Charles Schwab, Vanguard, whatever it is that you want to use, right? You got to pick. I did a video actually on this, and if you want to see it, I'll probably link it down in the description of this video. But yeah, you pick what type of broker you want to use. What type of investor you are matters too, because not all of the brokers are going to be the same. Some of these come with fees and X, Y, and Z. So you got to first establish like what is it you're trying to do. For me personally, I like to individually pick my stocks. I don't really like fees and all that extra stuff, but you can use whatever it is you want to use. Again, this is worth $1 million. You got this $200,000 right here, right? But when you bought it, it was only like $50. This is an example, y'all. It was $50 when you bought it, but now it's $200,000. You're going to sell it at $200,000. When you sell it for $200,000, you have now sold it for a gain. This was not a loss. What a lot of people end up doing, in my opinion, is when they see a little bit of something happen in the market, they get scared and they might sell high and buy high, which is not what you want to do. You want to buy it low and sell it high because that's a profit. That's the goal, but nothing in life is without risk. The stock market can be risky, but is it as risky, in my opinion, as most people who don't even invest in the stock market make it seem? No. I think that a lot of people who have that fear of like, oh, it's a scam, it's going to crash, they have never even invested in the stock market. I just want to know the people who even say that, have you invested in the stock market, or were you day trading? Are you a long-term holder? Historically, even when the stock market quote unquote crash, how is it that it always goes to all-time highs and is always breaking new records? It has never crashed like these people have been saying it has, and it just stayed there. It always recovers and then continuously keeps going up higher and higher every time. This is why it's important, in my opinion, for you to inform yourself, because if you do that, you'll be convinced the stock market is nothing but a scam. I want to make it very clear. Stocks and indexes are not the same thing. The S&P 500 is an index, and the stock market just so happens to have indexes and stocks that individuals can buy. An index fund is a type of mutual or an exchange traded fund, also known as ETF, that tracks the performance of a market index, such as the S&P 500, by holding the same stocks or bonds or a representative sample of them. This is why the S&P 500 is comprised of the top 500 companies in the United States, and other ETFs or mutual funds do kind of the same thing. They are comprised of different types of stocks, so you don't have to pick what stocks you want to invest in. A stock, also known as an equity, is a security that represents the ownership of a fraction of the issuing corporation. As we talked about earlier, it's like getting a slice of the cake. And that brings me to another point I think I need to talk about. When the stocks go down in the stock market, nobody is going to make you sell your stock, like just because you've seen the stock go down $20 and you said, oh my gosh, it's going down to nothing, I need to sell. Nobody is making you do that. Sometimes it's best to set it and forget it. Like if you're one of them people that get jumpy and you're like, oh my gosh, stocks is low, it's the end, it's going to be hard for you to stay in the market. That's how the stock market eats a lot of people up, in my opinion. Maybe some sort of news came out about a stock and then you see it drop. That would be an opportunity for most people, if you believe in the stock, to be like, hey, it's at a discount. This is not where you freak out when you're trying to build wealth. This is where you say, ooh, this is a great price. It's usually $147, but right now it's $125. Oh, do I have $1,000 anywhere? Do I have $50? Do I have $100? You're going to try, if you take your emotion out of it and think logically about, would this be better for you to sell your position or for you to buy a little bit more? Maybe your conclusion might be, hey, time to buy.
What?
Well, but if you invest $500, if the stocks go up, well, then eventually you could get $500 million.
What?
That would be nice.
But if the stock market crashes, well, then you lose all of your money.
What does it mean?
The stock market crashes does not mean you lose all your money. And that's, again, like what I was just talking about. Those are the people saying, oh, it crashed. Did you sell? When the stocks went down, because that's the crashes people are talking about. When they crash, do you sell, or did you buy more, or did you just hold and just wait for it to recover? Because it's more than likely going to recover, because historically, it always has recovered. So if we're talking about data and we're not talking about feelings, if we're talking about the charts that we can all look at and see with our own eyes, actually, I'm going to pull it up. I'm going to pull it up because I know a lot of people are like, no, it's a scam. You're going to lose it all. I was referring to the S&P 500. With individual stocks, they can be a little bit more risky and more volatile. So it really depends on what we're talking about. Sometimes it's better to look into stuff for yourself, because people will have you out here freaking out for no reason. All right, so what we're looking at here is the S&P 500 over the last 5 years. And as you can see, consistently going up. No matter, even if there's a dip, like we see a little dip here in 2022. But again, like I said, that to some people is, oh my gosh, it's crashing. This is where a lot of people say, ooh, time to buy. Because what ended up happening? It went all the way back up. Let's just go further back. Because again, there are these people that are like, oh, it's going to zero. It crashed and it's a scam. If we're going all the way back to 1996, the stock market continuously does the same thing. It goes up, it goes down, it goes down, it goes up, it goes down, it goes up, it goes up, it goes down, it goes down, it goes up. And consistently, no matter what, hitting all-time highs over the course of years. That is what we want to talk about. It's not a short-term play. It's something that over the course of time continuously goes up. We haven't seen it this low since it started. So when people are like, oh my gosh, it's going to zero, I don't know what they're talking about. Out of all the time that it's been a thing, it's up 708%. Now that is just the S&P 500. We're not talking about individual stocks. Now this is where a lot of people, if they are able to make some good picks, can really make some money. I'm going to go to one of my favorite stocks, even though it is down today. And if you look here over the past 5 years, what does that say, y'all? If we just look at this stock over the last 5 years, it's up 2,352.50% in 5 years. In 5 years, 2,000 anything is ridiculous. But this is what has happened. If you're looking here, the stock was $6. The stock has went through splits and everything, y'all. I was a part of the split and I'm still in for the ride. My whole point here is when you're sitting here on the back burner, like, hey, I don't know what's going to happen with the stock, you're wasting time. What ends up happening is, while a lot of people are like, oh, I want to get in the stock market, you're sitting on the sidelines, or you're saying you're too confused, or you're not really confused. You just need to make some action and do it and just wait. While you're waiting, there are people that are just like, hey, I'm buying it up. They're buying it up. When they see the dips, they're doing what they do, and they seen a little dip here for $107, and what did it do? It shot right up to $129 a few days later, and then it goes back down to $119. But guess what? A few days later, it's at $141. See, this is the type of stuff that's going on, and while you're on the sideline, too busy buying things at the store, you're too busy trying to do all these other different things that aren't necessary. These are the companies that are making a lot of money and the people that are owning, like I said, they own a little sliver of the stock. They're the ones making money while everyone else is spending money. And then they're yelling at the rooftops, hey, stop spending all this money because y'all are missing out. Y'all are missing out on what's going on. And of course, people are free to do whatever they want to do. The lady that we were talking about earlier, she said that she made a 200% return. Let's just say she invested $20,000. She's now sitting on $60,000, y'all. How many people would look at 60,000 opposed to 20 that you just wanted to blow on whatever it is you want to blow and say, well, I'd rather have 60,000. And then you could take the 40 that you didn't have to go work for, and you could go BS it. You could go on a trip. You could go do a haul. You could go get your new clothes. Go get whatever it is that you wanted to get, right? Because you still have the initial $20,000. You see what I'm saying? Or you could just take $20,000 of your money that you went and worked for. You could go spend it, go back to work and do it again and keep doing it. And every month, every year, every decade, however long you want to keep doing it, every time you look, you'll just never have anything that's making you money, and people get old, and hopefully you were saving and you weren't just spending all your money, because at some point our bodies just, they can't work anymore. The people who have that money working for them, they are going to be able to depend on that money. But unfortunately, that's just not what happens with a lot of people. And then we end up seeing people with these harsh financial stories. I had somebody ask me one time, why do you care what other people are doing with their money? You got your life, I got my life, right? I'm not trying to handcuff nobody. That is not what I'm trying to do here. If you want to go out and spend all your money and whatever it is, like, as long as you can deal with whatever comes with it, cool. But what I really feel is that a lot of people do not think about the implications of what they're doing today. So instead of me not talking about it, because I could get on here and talk about a bunch of BS, which is what most people are listening to anyway, I'd rather use my mic to say, hey, these sort of things are something that we should be thinking about. Is if you're younger, if you're in your 20s, this is something you should be thinking about because you can get ahead. If you're in your 30s, hey, time to buckle down. 20 years, do you still want to be working? At 40, we're like, hey, we need to start having a serious conversation, especially if you got kids. Like, these are the type of conversations, for some reason, people don't want to have, but they're necessary because time is going to do its thing. Why wouldn't I talk about something that I know is inevitable for most people, which is getting old and the possibility of not being able to work? Would you rather me get on here and talk about a bunch of ratchet stuff? Because I really think that is what a lot of people would prefer. And what does that do? I think we as people be so serious about the most unserious of things. And then when it comes to our own personal finances or things that can better us, it's like, don't talk about that. No. Let people do what they want to do. Why would I, or anybody for that matter, want to see somebody struggling? Because as soon as something go wrong, then it's okay to throw up the GoFundMe. It's okay to do all of that and to be like, oh, we need money, send support. Don't ask questions for anyone struggling, even though a lot of these people online are scammers. No, just give them money. Just do this, just do that. Just have compassion. Just have this, have that. Where is the prevention? Where is the conversations of, hey, what can we do to alleviate all of this? There are people online begging, and there are people online that are scamming. We have to sit here and have discernment and try to figure out who is who and all these different things. Why aren't we teaching people to be responsible in the first place? We're talking about the after effects of all of these bad things happening. Unfortunately, we see people make a whole list of bad financial decisions that ended up piling up and piling up and piling up and piling up. But then they can throw out a GoFundMe and then not have no plan about how they're ever going to get out of a situation. And we're just supposed to send money. We're not supposed to ask. We're not supposed to do anything. We're not supposed to offer any sort of no knowledge, no nothing. And then when it comes to actually trying to help that person not be in the situation again, there's a lot of people that are like, no, they don't need your help on how to do blah, blah, blah. But how not if you're going to end up back here again? And this is why I say it is important. We all talking about the latest celebrity gossip though. Y'all know every song. Y'all know every dance. Y'all know all the new trends is out. Y'all got all the new stuff. And nobody's talking about the things that are important. And then when people do talk about it, it's like, why do you care? Why don't you? Why don't you care? Why aren't you being serious with the people in your circle? Why can't y'all have a serious conversation? Everybody don't want to talk about a bunch of nothing. And that's perfectly fine. Like, everybody, like, I got my ratchet moments. I'm just saying, can we be serious? at some point in time about the things that are going to help people be better? Or does everything have to be a game? Do y'all understand that a lot of the people who are yelling out, let them do what they want to do, will literally be the same people watching you at your demise, and they won't help you? They will not help. And then they will look at other people just like, well, we're going to see what they do. They're not going to be moving and shaking nothing for you. So why not inform people with what you were blessed with, which is knowledge? Why not share it? And another thing is, you don't have to invest in the stock market either. What if you have another way of making a whole lot of money? Like maybe you have a business, or maybe you have like, I don't know, like people be having ways they make money. Maybe you have a skill or whatever the case may be. There are other ways, but my whole thing is we just need to have those sort of conversations more than just talking about a bunch of ratchetness and stuff that doesn't matter. We have to start making better decisions today in order to have a better future.